Does Robinhood have trade fees? Robinhood revolutionized the brokerage industry by introducing commission-free trading, allowing users to trade stocks, ETFs, options, and cryptocurrencies without incurring traditional trading fees. This model has made investing more accessible, especially for those who trade frequently. However, while the absence of commissions is appealing, it's essential to be aware of other potential costs associated with the platform. One notable fee is the $100 charge for outgoing automated customer account transfer, ACAT transfers, which is considered high compared to industry standards. Additionally, Robinhood offers a premium subscription service called Robinhood Gold, priced at $5 per month, which provides benefits such as enhanced research tools and higher interest rates on uninvested cash. For instant withdrawals, users may incur fees ranging from a minimum of $2 to a maximum of 1.75% of the withdrawal amount. It's also worth noting that while standard accounts earn 0.01% APY on uninvested cash, Robinhood Gold members enjoy a significantly higher rate of 4.00% APY. A fascinating aspect of Robinhood's fee structure is its reliance on payment for order flow, PFOF. This means that while users aren't paying commissions, Robinhood earns revenue by directing trade orders to specific market makers in exchange for compensation. This practice has been a topic of debate, with some critics arguing that it may lead to potential conflicts of interest regarding trade execution quality. In summary, while Robinhood's commission-free trading model offers significant advantages, users should remain cognizant of other fees and the platform's revenue mechanisms to make informed investment decisions.